Good morning, guys, and welcome to today's edition of the London Session Open. Today is June 4th, 2020, and my name is Alejandro Zambrano. I'm the Global Chief Market Strategist with ATFX. I'm also the manager of InvestingQ, which is a website I created to help traders hopefully trade better and understand the markets faster. And hopefully make more money ultimately. So what we're going to do now then? Well, what we usually do at this time of the day, we're going to take a look at the markets and see if anything interesting is happening. I can tell you I booked some profits last night in the Dow Jones. Markets, as you know, has been just soaring lately. And not only that, like I had outlooks on Aussie dollar, Swissy, New Zealand dollar versus the Japanese yen, and some other markets as well. And they have all sort of reached targets. This massive risk on rally. And we're starting to see a bit of profit taking today. Just because, you know, we are very elevated doesn't mean that we can't continue to trade upwards. But it's definitely time to be wary because it's not time to chase and get involved here. The time to get involved was actually around the bank holiday we had in the UK, I think 2 weeks ago. That was the last move unless you bought at the really lows. Okay, so we're going to talk a bit and we're going to begin with the talking about some of the numbers. So yesterday we got some very good numbers from the US. On my top right corner you can see we have the ADP numbers. They came out actually showing that only 2.76 million people lost, whereas the market projected losses of 9 million. And if I remember correctly, the reading prior to that was like minus 20 or something like that, right? So this is actually a very good number showing that job losses are not as severe as people thought. That's good. This we already talked about, but it's worthwhile mentioning again. We got the Caxing PMI services that was 2 days ago, and that number increased from 44 to 55. So the service sector is growing. And this morning I saw some pictures from Paris, and people were out on the streets having coffees and beers. So things are picking up, and you know, a lot of people are surprised. Like, how can this happen? I thought the world was gonna go under. I sold my stocks at the lows. Well, that's the main media view of doing it. Not just mainstream, even it's the main theme on Twitter is that the world is gonna collapse. Yeah, and maybe it will collapse at one point, but you know, obviously just taking things at face value was a bad idea. And hopefully you've been with me over the last couple of months, and you know, we were bearish on the way down, and then of course when the market's starting to go up, we're turning bullish most of the time. And so far, it worked out really good. But yeah, so that's awesome, actually. Awesome for everybody. You know, you can go out again and enjoy a beer if you want to. Or you know, whatever you enjoy, a cup of coffee. Anyway, today ECB rate meeting. So that they have all these QE programs, and they're pumping so much money into the system. So if they continue at the current pace, then by October they will be out of money. That's what people are projecting. So what people are saying now is that at the meeting now they're gonna boost that with some 50 billion, which is a serious amount of money, 50 billion euros. So that's what the markets are projecting. And if that happens, of course, you know, the DAX gets a bit of a boost, but it's pretty much priced in now. So if they don't boost with 100 billion, if they want to delay things, then that could be an issue. There's similar talks about the situation in the UK that they would need to add more money eventually. What else? Today, jobless claims anticipated to show that 1.8 million people lost their jobs from 2.1 million in the week before. And yesterday as well, I don't think we talked about it, but Germany did another fiscal stimulus package, and that was for 130 billion euros. That's 3.8% of their GDP. No wonder the German DAX was on fire yesterday. And this package comes on top of the 750 billions announced in March. So we're talking about significant amount of money in the markets. And if it doesn't boost economic growth, it might boost inflation. And if you look throughout history, you know, even at times of turmoil, like I think it's the they call it the tequila crisis, happened many years ago. and there was a crisis in Mexico, and there's been similar crisis in other parts of the world, where in case of Mexico, anyway, the currency just collapsed, the economy was just terrible, but the stock market was going up because the stock market goes up also because of inflation. So at least you could have kept your value if you had long stocks. So long stocks most of the time is okay. It is right 70% of all the years for the last 120 years. So let's talk a bit about the levels. Let's talk a bit about what's going on as well. Let's see who's in the chat box today. Good morning to you guys. I haven't said it already, by the way. Okay, so no one is there. Okay, I know we started a little bit earlier today than usual, so that's maybe why. If you are watching, just say hello here if you want to, or ask questions. We still have some more 10 minutes to before we need to wrap things up. All right, let's talk about currencies first then. All right, this is your euro. We said break to 110.42 will take you up towards 112.84. We went quite high, went as high as 112.59, which is also the R1 level of the monthly pivot point indicator. That was a good spot to book profits. In the short term, you know, because this is a bullish trend, I don't necessarily think it's going to come down collapsing like it did here, but so I'm going to remain bullish for now. I think we can come down maybe to 111.62, and then we try to attack the high again, and then we'll see. In the long run, I am actually neutral. I think we might go up a bit more, but I don't think we're going to trade above 115.04. Then we're going to eventually come back. I'm actually working on the Q3 report. Hopefully I can share this one with you maybe in a week or so. But yeah, short term upwards. GBP, I think we talked about this one yesterday as well. We talked about this high here, which is it's actually 126.43. We have another high here from April 14th at the 126.43 again, pretty much same levels. You got the monthly R1 here. You got a nice sharp little move here, and we're now pulling back. I think this makes perfect sense. So what I said yesterday, let this trade sideways, and if we go up, take out the highs. If that happens next week, we can potentially go long. For now, though, I think we might go up and probably go back down to the middle. What would I have done here then? I wouldn't really do too much here unless you like this kind of range trades. If you like this stuff, then yeah, you know, you maybe let it go up a bit and you can sell. Push it down to 124. I think we will go down to 124. But sometimes, you know, we can be surprised. And if we trade sideways and then check out the high, then that would turn me bullish. Dollar versus the Japanese yen. Maybe you missed out on the euro move. Well, hopefully you didn't miss out on the dollar yen move. I know dollar yen was very boring and it really didn't move a lot for a long period of time. But as you can see here on June 2nd, 2 days ago, we had that breakout. The idea was very straightforward. Take out the high, we go up. We're up with a 101 pip. One would have bought here on the breakout. I think we would have a risk reward ratio right now of 1 to 1. Say stop loss would have gone here. Then you would have had a 1.16 risk reward ratio. If we go up to the target, you're looking at a 2.5. Now we're approaching the first level here, the R2 on the monthly. But because the pivot point levels here are based on what happened in May, and May was a very quiet month for dollar versus the Japanese yen, the pivot point numbers or indicators are underestimating the potential range for this month. I think we could maybe go all the way up to 110.68, which is slightly above my target. So what's the plan of action here then? Well, I wouldn't really force a trade on right now. If you missed out, if you snooze, you lose. This is what happened here. Now we're going up here, and we can go up. This will be a terrific opportunity. This is what I think. What you want to do with your money is up to you. I think it would be a terrific opportunity to maybe lock 50, if not 75% of profits. In the case of the Dow Jones, just to let you know, I booked everything and hoping for a decline. We'll talk about that in a few minutes. But yeah, so let it go up here. This is a good little spot to get out, I think. And then if we go out here, we spend a bit of time here, maybe tomorrow or so, we can pull back. And then this level here will be my trend finding level. So for tomorrow, I reckon maybe we can do something like this. But I want to, and then push it upwards. But I want to see the price go up to confirm that bullish bias. What else? Crude oil markets. So let's talk about crude. So my theory in general is that stock markets will see a bit of profit taking. That's what I think. Are we gonna see stock markets tumble? Probably not. If they would tumble though and come down a bit stronger, like 2-3% loss, then I think crude oil prices will come down to 34.40, and that is the original breakout. Remember, we talked about this as well, breaking out here, and we said breaking out here at 35.95, and I said 35.95 was my preference. We went up a bit. I think we went up with percentage-wise with some 6%, which is not bad actually. It's really good. And now we're coming back down again. Maybe I'm exaggerating when I think that the market's gonna add, you know, the 5-6% loss. If we go down that with 20%, that's actually quite much. But if you look at it from this perspective, if you put FIPS on this is just a 50% correction. So I'm much more cautious here. And you know what, I don't really mind, because you need to look at it like this. You know, we had some really good trades on in stock markets. That's been what's been delivering profits recently. Now you have currency markets as well, doing some of the lifting, and what happens here is that it's not always going to be a great opportunity to get involved in all markets, and this is one of these where I am definitely bullish. We had all the breakouts, we can definitely go up, but if you're not already long, unfortunately we missed out. So where's my spot where I want to go long in case of because I'm outside of the market? Then, well, I would look for a break to 34.40. That's what I would, decline to 34.40. That's what I would look at. Doesn't mean that we can't just go upwards. Doesn't mean that we should sell. It just means that we need to pull back to get that risk-reward ratio. And let's take a look now at the gold. So gold, unfortunately, did not work out, and I think I misjudged where to put the trend defining level. So what's happening is you see the market went upwards, right? And we talked about buying here for this to go up. That went fine, and then it went down, and it went down quite aggressively, and then went up, and then it came down again. And my trend defining level was just here, but because stock markets, as you can see, is just gaining and gaining and gaining, very few people want to buy gold right now because they'd rather, you know, buy shares. And we traded below that level, but now you see we're coming back up again. So what should we be doing here? I think as a general idea would just be to, if you look at it today now, because we got started out yesterday on that view, and we're still within a range. There's no question about that. And this is the monthly S1. So we can come down a bit, but from 1678 and 1656, between that level, I'm going to be bullish. This is not for someone that wants quick profits. This, as you can see, we reached this level already in April. We haven't really gone anywhere. But I think in general, below this level, we can go upwards. And you know, if you try to be aggressive about it, and you sort of say, okay, maybe this looks a bit like a range, well, then you know you could potentially be looking at something like this, you know. If we indeed bottom out and go upwards, then that's your 11% move. That's $186 per contract. All right, this is the German DAX. German DAX got this one spot on. You see, the idea was here, buy breakouts. We talked about it already in May 20th, and before that even. We went all the way up. We reached that take profit level. This is the time to book profits and walk away fully. In the past, I think yesterday I said look to book a bit of profits here, and I think I even said that the day before that as well. You know, chip off 50%, 75%. If one is still long, this is the good opportunity to get out totally. In the big picture, of course, pension funds and stuff like that just keep everything, right? Especially if you're gonna retire in 20 years or 10 years. I mean, who knows what's gonna happen by then? But ultimately, I think we're gonna go upwards. Looking at this today, just put some FIPS on this from the very low to the very high. I'm looking for a 50% correction. That takes you down to 1230. If you look at the Dow Jones, as we talked about before, I bought on the breakout here. I traded it up to this point here, and then I bought on the dip here, and I traded all the way up here. Now, again, all the other analysis, could do a bunch of other analysis on other markets. They all hit take profit levels. They're all risk on positions, and that tells me when I'm getting everything right, all the stars align, everything just looks really good, and they're all the same trade, then that's a sign that's like a time to step back. So if we go back down to 25,704, I'm going to be bullish from that level. What's important here, though, what I would like to see, you know, I might go pull back a bit and buy the same amount as I bought before. I wouldn't mind that. But to trade for big positions, I would probably like to see Dow Jones come down. I would like to see the DAX come down, and all of them should be at their same buying spot at the same time. Okay, it's 10 o'clock. Unfortunately, I need to leave you guys. I'm just going to see if there's any good mornings here. And there are some good mornings. So Mauritius here. Good morning to you, sir. And as well, we have Marvin. Good morning to you. Okay, guys, we're going to wrap things up. And I want to thank you guys for joining me here in the chat. I want to thank everybody else as well that is watching the recording. Don't forget to hit that like button. As well, we have this little, this is my Twitter handle. You'll see that in the chat right now. If you're watching, if you're investing Q, it's there. Very easy to follow me as well. Don't forget, we have a premium trading course that you can sign up to. I used to sell a similar version of that course for £1,000. It was a bit different because it had much more macro fundamentals. This is much more geared towards trading and trading strategy. 2 trading strategies, advanced money management, statistics and techniques, and it's all free with an ATFX account. Okay, guys, we're going to wrap things up. If you do have any questions for me, don't forget to reach out to me via Twitter. Have a great day, and I hope to see you guys soon. Thank you, and bye-bye.